Good morning, everybody. Welcome to the Flow Show, Tuesday, the 11th of November. Just to give you a forewarning, we will be pausing the show at 11 a.m. for the 2 minutes armistice silence. So be prepared for that. I'll put a note in Zoom for any latecomers shortly. We will be observing that at 11 a.m., so 30 minutes from now. Morning, Kate.
Morning, Ryan. All good, man?
Yeah, all good, all good. Busy. Working on tons of stuff behind the scenes for our trading analytics launch, which is upcoming. I'm not going to give any secrets away, but yeah, lots of work going on behind the scenes. How you doing, mate?
Yeah, all good, man. All good. Ready for another day. Maybe a bit of a quiet one today, is it? After we had most of what we are expecting already.
Yeah, it's Veterans Holiday in the US as well.
Yeah.
Stocks are open, but bonds are going to be shut, so it could be a fairly quiet day.
Yeah.
Much going to happen in the shutdown saga until tomorrow. So yeah, we'll see if it's a quiet one or not. I'm sure Trump won't be quiet, but let's see if he takes a morning off. Anyway, let's get cracking because there's plenty of stuff to talk about. Anyway, first and foremost. We're going to start off in Japan, where Takeichi's new growth panel has recommended that Japan's going to aim for higher revenue without tax hikes, something Rachel Reeves could do with listening to. We've had one of the economy ministers, Kyuchi. I don't know if he's the economic revitalization minister, the economic for, I don't know, funny walks minister. It's one of them anyway. He says inflation is weighing on consumption and yen weakness is driving costs, saying that the weak yen could drive inflation higher and that they're monitoring the trends closely. Akazawa, he's the trade guy, but he's speaking about domestic stuff, saying smaller firms are seeing their orders stagnate due to tariffs. We've also had the policy chief of the LDP, that's Takeichi's party, Kobayashi, saying that he sees a gap with fiscal authorities on the size of the upcoming package. This is going to be their budget stuff. So looks like a bit of a bum fight may develop over what fiscal authorities see the Japan doing and what Takeichi wants to do, which sort of raises the spectre of how fiscally dovish she might be, but we'll wait for the further details on that. Takeichi herself has been out saying that she can't say the economy has exited deflation yet, so still that call yet to be fully made. We had a little bit of data out from Japan, what's called the Economy Watchers Survey, which the current number went up to 49.1 from 47.1, so positive there. The outlook also jumped to 53.1 from 48.5, so things are looking a bit better there. Kay, on the Japanese stuff, we've been noting it. It's more evident now that this lot are gonna have a strong focus on the currency, perhaps more stronger than Ishiba or anyone else before.
Yeah, because I think they know exactly what's going to happen if they put everything in place that they want to do. I also put a small article there in our newsroom regarding that they want to use actually public funds to accelerate growth on the nuclear projects as well. That's of course going to add to the spending, and looks like they are aware of what the market is going to do to the yen if the market doesn't like. It's not that the market doesn't like the fiscal spending, but it knows that it waters down the finances, the public finances. So I mean the automatic effect is actually a weaker yen since you water everything down. So I think they're fully aware of that. Maybe, just maybe, we're going to see a bit more of an interventionist MOF if this continues, because the speed isn't there, but the direction is clearly there now for the yen, right?
Yeah, I mean, we sort of noted that from the new finance minister and all the currency bods who are seemingly starting their warnings on a higher level than the other mob.
Yeah,
So it's definitely something we need to keep an eye on. But
yeah.
yeah, I mean, we're still not seeing any big fiscal bazookas, which was the original fear for Takaichi. So
Yeah, but,
maybe there's still some to come when we get the full budget and fiscal outlook. But it
yeah,
does
but
seem like she wants to keep it under control a bit.
yeah, but the market anticipates all the time, right? So it could be the case that the yen, a bit like the UK budget, yen weakens until the Japanese budget, and then maybe stops. Um, the thing is, though, that the market, as I said, is anticipating. We had again, even though the yield was lower, we had again a very weak 30-year JGB auction overnight. Just testimony of the market trading or fearing that fiscal looseness that Takeichi and her team are going to put in place. So yeah, maybe the MOF is going to have a tougher job, and as you rightfully said, they are starting the rhetorics on a couple of notches higher than what they usually would do. Um, and especially before during Corona time, we needed one more even nudge before they intervened then. But yeah, they're likely going to keep an eye on what's happening in the end.
Yeah, most definitely. Right, moving over to them lot who like to put holes in cheese. Switzerland, they're on the cusp of agreeing a deal that would take tariffs down to 15% or thereabouts with the US. So things looking a bit better over there. It's actually seeing the Swissy gain a little bit, not massively, but it's putting some good news for those guys. Over in the UK, Reeves has said there's no final decisions yet on her budget measures, which means we're going to get more trial balloons floated around on various policies until she sees the market and press reaction to those before she decides on what to do. She may have her hands a bit tied on that front, given the jobs data that was out today. Not the best, shall we say, to put it mildly. We saw the unemployment rate ticking up to 5%, was expected to tick up to 4.9%. Jobless claims came in higher at 29,000. Payrolled employees fell 32,000. Wages, one up, one down. Both down. Ex bonus came in at 4.6, including bonus came in at 4.8, softer than expected, was expected unchanged on that number. But we're still seeing a divergence between private and public sector wages, with public sector wages continuing to rise. Mentioned over the last couple of months, there's been some pay rises coming through in August. It's a problem because this is all falling under the realm of Reeves, because public sector wages are obviously paid for by the government, various departments. So it all falls into the budgetary stuff that we're going to get. And we're under a lot of pressure here in the UK because if the public sector doesn't like wages, they go on strike, and then usually the government caves in, which just puts more pressure on the public finances. So double whammy of bad news for Reeves there. There was lower employment and the rising public sector wages, but that's her bag to deal with, shall we say. What that's done, though, is push up expectations for December cut now to 85% probability. That was from around 70% prior to the data. This might be a little less hawkish. We're only pricing 67 basis points of cuts by the end of next year versus 57% previously. So not a big jump there. It's basically just over 2 cuts, edging towards 3 cuts, which, if the data continues like this, I think is going to be a little bit low in terms of that pricing. But we'll have to wait and see what inflation and the likes does. Either way, we're seeing, as I say, December priced up a bit more. Bank of England's Green says wages have surprised a little on the downside. She said today's wage data is good news as it's a bit lower than expected. though she says that the latest unemployment reading is not so great, but problems with the labour force survey make it hard to know what's going on. It's a little dig at the ONS. Then she did say wages are still way too high given the weak growth, which might be a nod to those public sector pay deals. She says, I'm not convinced monetary policy is meaningfully restrictive in the UK. So she's more worried about inflation persistence, which means monetary policy needs to be more restrictive than otherwise. So very undovish on that stance. Over in Germany, we've got the zoo numbers. They came in, well, less crappy in one or in both of them. Current conditions improved from -80 to -78.7, but was expected in a bit better. The economic sentiment, sorry, that was down 38.5 versus 39.3, was expected to rise to 41. So we're still not seeing any of those sentiment improvements over that investment package that they're working on, and that's what Zoo remarked as well. They say, although the investment program is likely to provide economic stimulus, the structural problems continue to exist. They say the overall mood is characterized by a fall in confidence in the capacity of Germany's economic policy to tackle the pressing issues. So people not trusting what the government's up to. Over at the ECB's Kocher says we are in a good position on rates. Expectations show not much will happen in the next few months. ECB's Wojcik says we have had slightly higher growth and inflation than forecast. So economically, we are in a good place. Well, if flatlining is a good place, I hate to see what going wrong is all about. Fed's Daily says policymakers need to keep an open mind about further rate cuts. The balance of risks have shifted as the labour market has softened. Inflation has declined but remains elevated. Policy remains modestly restrictive. The rate cut so far has supported the labour market and keeps a downward pressure on inflation. It doesn't want to make the mistake of holding on to rates too long. It says historically the FOMC has been more divided than it is now. Fed's Muslim says firms say labour market has softened a little, but things look reasonably okay. He says the labour market has cooled in an orderly way. He says firms that are selling to consumers are having more difficulty passing on higher prices. It says there's limited room to ease policy further. It says it's important to tread with caution and we need to lean against inflation. Monetary policy is closer to neutral than modestly restrictive. Fitzmirren is back to his full-on dovish self. Says the potential end to the shutdown doesn't change the outlook much, and that the data since September suggests the Fed should be more dovish than its September view. It says it's reasonable to be incrementally more dovish. It says a 50 basis point cut is appropriate for December, with 25 at a minimum. We got a bit of bond action yesterday, 3-year note sale. That went off pretty okay. Looking at the numbers, bid to cover was up, directs was up, indirects was up as well. So all tickety-boo over there. Right, over to the shutdown. Yesterday, House Speaker Johnson says he believed he had the votes to pass the bill, aiming for a shutdown vote as early as Wednesday. That progressed overnight with the Senate having enough votes to pass that stopgap funding bill, which now kicks it over to the next process, which will happen tomorrow. Trump says all air traffic controllers must get back to work now, and anyone who doesn't will be substantially docked. Economic advisor Hassett says he's confident of air traffic normalising by Thanksgiving. Just again shows you how the clock, and something that Dale raised is having an important impact on ending this shutdown. Then Trump was out again saying on the shutdown the deal is very good, and it looks like you're going to get another Independence Day, Yanks, because he says we are going to be a country very quickly soon, whatever the fuck that means. And you're all getting your $2,000 stimmy checks, apparently, and Trump says that any money left over from those payments, which are coming from all his massive tariff income pouring into the country, which will be substantial, will be used to substantially pay down the national debt. So anything left over is all going to go on debt, apparently. Kay, is it too late to hop over to the US and become a resident to grab a couple of grand?
Yeah, I think, and I think everyone can hope, but I'm not sure that Trump is going to send $2,000 checks into the mail. That's not what Besant was planning anyway. If you want to give it a go, I mean, you're not too far from the coast where you are. You have your dinghy still in your beach hut.
Yeah, I'll have to paddle over. Yeah, I mean, we're looking at it. If this happens, it's going to be the same as what happened with the $1,000 stimmies. It's all probably going to go in the stock market. So we'll see a boost in the stock market. We'll see a little boost in retail sales, and then everything will go back to normal. So that's what happened the last time. Do you think that may be what's half behind the stock market rally as well?
Could be, mate. Yeah, could be. There must be something there. But really, are they really going to send out checks? I didn't see that. I mean, maybe Trump said it and I overlooked it. Because I thought that Besant already said that it was going to be under the form of tax cuts and not real checks. But yeah, I mean, everything that helps. In that way, whether it is to reduce debt or sending effectively checks, is going to support the stock market, because that's what the market does over the past 2-3 years, right? The slightest positive news is immediately translated into the stock market. But I do think there's a bit of optimistic vibes around the potential end of the shutdown, which the Senate already voted, right? And has to go to the House now. But again, as we were saying yesterday, it's a plaster on an open wound, because it's only pushing back the issues until January.
Yeah, very much so. And yeah, there is still some risk that we get a bit of shenanigans tomorrow in the House votes, but we'll have to wait and see what happens over there. I
Some of
don't
those
think.
Democrats who voted to end the shutdown have been getting a finger slap, right?
Yeah, exactly. Saying that they gave in too easily and didn't really get anything back for that. So yeah, you never rule it out what's going on over there. But yeah, and it still might just be a temporary thing till the end of January, and then we play the game all over again. But it will get everyone through the holidays and through Christmas, which will be good for Trump's approval ratings and the stock market, and that's what he's concerned about. Right, that's it from all the headlines that I've got. Unless you've got anything else, Kay?
No, just one little interesting thing in regards to Chinese export relaxation, let's say, towards the US for all those rare earth things. Now they're going to make a list to make sure that they don't send any rare earths to for military use, it seems, to the US. So the big trade deal is already seeing a few let's say, hiccups, because Xi will have the power to stop anything that is directly military related.
Yeah, they're creating some digital tracking program or something.
Mm.
I read, or whatever it is, but yeah, who knows? But it's happening both sides, so
Oh yeah.
let's not fool ourselves about that. Right, so yeah, it's going to be a bit of a quiet day today. Not a lot out. 10 minutes, you will see that NFIB Small Business Optimism Index coming at the top. We won't be getting inventory data. We won't be getting, that's it for the rest of the day. I think we'll get the red book, unless they delay that because of the holiday. That's a bit of retail sales number there year on year. We get old Dingra speaking later on. She's the big archdove at the Bank of England, and no doubt we'll hear from a few other pods as well. So that's that on the data front. Oh, it might be done by 11 o'clock, let alone tracking over at 11 o'clock. Right, what's going on in prices? Fairly quiet. We've had dollar yen having a little look up. I don't know if it actually made a new high. It might have done by just a little pip over that prior one, which can sometimes be significant. It just shows you the market is still pushing that way and just taking out the prior high, just a little psychological move. But we've come off since and we've had another rally towards it. So this 154 40s 50s K is proving a bit of a tough nut. Something we can be forward.
Oh, you know what? Maybe those option guys are waiting up there. Because we've heard last week that they were selling yen again through options, right? And maybe there's a bit of option activity around there. And could be enough for this round. Why not? But the thing is, if you look at the yen crosses, they are still supported, right? Look at euro yen is trying to move back up to that 178.80. And that's preventing dollar yen from really falling out of bed. We could see a bit of a setback if equities come down, because it has traded with equities over the past week or so as well. And yeah, that 154.5 seems to be where some have parked the bus to try to get some profits in the dollar yen. And the fact we are not tapping 154.5 mils may really hint that there are offers up there at some of the ones who are having the orders trying to make some cheap money and front running them a little bit.
Yeah, I wouldn't be surprised if there may be a bit of barrier action going on here up
Strange.
towards some of these levels, because we haven't been there for a while. So if any were put on, they've been sitting there for quite a while. That may be something that's in. Oh, I do miss my old barrier information.
Yeah, and I miss my power dual information as well, because if people want to trade those ranges, they sometimes have a lot of money to throw at it.
Yeah, yeah. But I think if we get a break here, we're definitely going to be probably going to test that 155 pretty quickly, and then we see what happens up there. I may be tempted by a little buy stop, maybe 55 or something, just to see if we get a little follow through. But yeah, we'll see what the volatility is like, liquidity is like for the rest of the day for that one. Euro sterling got a little boost, obviously on the back of the worst UK data. We're back up, tickling around this area again, 15s, 18s, 20s. Has it got enough in the tank to go through? I'm not so sure. It's going to need something more to come from that. We've got GDP data coming up on Thursday, which could be another kicker, depending on where we're at. If we're trading down here again, by the time we get that data, we'll probably see the same old thing happening. But yeah, could just be setting up a bit of consolidation in this range, 87.50s, 88.20s, 30s, that sort of area, until we grind down to the budget. So if you look at this one, you might just want to be thinking about just some scalping of the ranges more than anything else. Where should we go from here? Let's have a look at the old dollar CAD, because that's trying to get itself back in the mix. We're up at this Poxy 30s level again, which is really an area that it's just messed around with so many times all through this. We had a little poke above earlier. Now we're just sitting here again. So it's not breaking and holding for now, which suggests, if that remains the case, that we might have a little run back down towards the lows. That 140 was pretty solid in the end yesterday. So really, you know what to do with this one. If we're breaking back above 30s, we might be going on for a bit of a wonder higher. If we can't, we're probably going to go and put in another test of that 140 level and take your cues for there. I was hanging out for maybe a push down to this level for a long, but no, didn't get that far. But otherwise, this again still just looks like a bit of a pullback. If you're looking at just this latest trend, it's still valid. It's still looking like this is a pullback. and maybe we go on again and having a look. You got any thoughts on this one, Kay?
Just the same as you are looking at figure 40 or so, and then we'll see when it trades outside of it. I I I'm looking at the dollar and the euro cat. Obviously, euro dollar is not moving, so they're moving together. But the interesting one on the euro cat is that we held all those little drops and dips under 162 are getting bought. And again, overnight, the same thing happened. That's probably keeping it interesting for for the dollar Canada as well. And that's coinciding with that roughly that 140. I don't think Canada is out of the woods, but it obviously, I mean, at any time, well, it's December, yeah, where they're going to talk about USMCA. That there probably it's going to move quite a lot, but it does look like the Friday job report has been digested now, right?
Yeah.
And we are
I
just
think.
hanging around here waiting for what's to happen next.
Yeah, I think we probably have to maybe see another couple of sessions. As I say, if we get back above 140.30s and are holding it, then I'd say we're over that hump. But if we can't, then I think we're still in a maybe a bit of a rally sell mode for this pair for at least in the short term.
Right.
We shall see, and then if we might get a push lower for that one. Right, what else shall we have a look at? Euro Swiss, as mentioned, we're seeing it come off. We're back below the bottom of this zone, 89, 90s, 85s, whatever you want to call it. We're just under. So this deal with the US bringing probably a decent move than we've seen for a while in all this uptrend. This uptrend is still pretty valid though, unless we're breaking back below this sort of area, 92, 50, 60s. This again might just come into pullback mode. We've got some up prior lows there or thereabouts, round about where we are now. So I'm still happy staying long, but I'm probably going to tighten my stop up to just under that level down there at 50s. But it was certainly solid up the top here, as I pointed out yesterday. So it's got a bit of work to do to get back up there. But if we go back there pretty quickly, we might be on for a break. But this one might be washing out for a bit longer. Right, okay, I'm going to bounce it over to you, but I'll give you a nod when the clock strikes.
Yeah. I mean, we on that Swissy, it's actually been coming for over a week now, because the week before last we already heard about renegotiations or rediscussions about the Swiss. But what's the difference now is that they stuck that 15% number on it, as where before we didn't know whether it was going to come back from 39 down to 30 or lower, and now they stuck that 15 on it. So that's where the market, and I guess just some smart assets trying to stop out some people who are short Swiss. I agree with you. 92 and a half, 92 and a half, around there. If we get around there, I'm probably going to re-enter mine as well. All right, cable, bad numbers, and we are back from that 38.2 that we saw earlier, yesterday, and then again overnight. It's been sold off, and we are back on this 23.6. We could be trading ranges for a little bit on that cable, although I think that rallies up to back up to that level. We should be monitoring them, because on the day I think rallies up to 75, 85 could be sold into. There's little reason to buy sterling on the back of that jobs report, obviously, because unless something really dramatic happens to the dollar, and the dollar in general is hovering around, but the euro dollar is still not too far away from that zone here. 116, the figure. I'm going to shut up now. Right.
Thank you, everybody. Yeah,
Thank
thank
you.
you.
Thank you, everybody. So yeah, the euro dollar is supported by the crosses really. You look at euro sterling, euro yen, etc., etc. They're still quite supportive here. Um, can it go through again? Same question. We've been tapping this already quite a while. I would say though that if it breaks above 115.90 figure, we may see a quick run into that 116.40.55 because as well, not only those euro crosses are bid, but the dollar, the euro dollar side of things, the dollar is not really getting too much support from potential ending or kicking the can down the road on the shutdown. So I would not be overly surprised if we can get through it. Um, yeah, Ali, you're holding shorts dot yen. We spoke about the dot yen, right? The 154.5 exactly, and the cable as well. Just mentioned before we had our 2 minute silence. Um, One that is still not really getting off the ground is indeed the Kiwi. Only that last move lower, we already stopped at the 23.6. So even though we have the Aussie Kiwi stabilizing a bit, the Kiwi is still not getting much support, and really we have to get back above 56, 70, 90 to start going higher. Otherwise, it could still be in for a test into the 55s on any more strength of the dollar. We have to talk about those metals again and again. Defying the laws of gravity, gold again saw more demand yesterday afternoon in the US and support, even though the Asia did not really ramp it higher, but just kept the support. And we are back at this 50% retracement of that move, the correction lower that we have seen. If we close above here, we're probably going to have a look at 41.90 even. Why not back into the 42s? Really, I think the market is trading on the potential of continuous weaker data, keeping the yields in check. Gold bid still a hedge, and if we look at that trade deal between the US and China, already China eyeing at putting some sort of restrictions onto stuff. I would say if we get a move back into the 40, 60, 75 zone, I might already be tempted to pick some up because it just looks very big still. And silver done exactly the same, break back above 50, 49.80, 50.20. Not even really stopped there. Just maybe a little hold here, but we're already back at the 61.8. We were discussing with Jean-Marc in the room. We're discussing this that there's potentially some ABCD in the works, but the thing is, what's the catalyst? Where's the catalyst going to come from? We had all the reasons, or a lot of reasons, to stick closer to 45, to continue to trade down to the major trendline support around here, but it didn't happen. In on the contrary, it's been bid again. So I'm failing to see right now a catalyst in the markets to bring those metals back down. Never say never. Obviously, they could, but I'm failing to see a catalyst because the catalyst that we had should have brought this back down or stay lower. I would say, and I've already been saying that the fact that it could not stay under that middle level, that 47.5, was already an indication that the next move could have been a push higher again. So here we are. If it holds around above 51. 52.5 will probably be the next zone that we are going to target. Um, Ali, we've spoken about the Swiss as well, but anyway, what's happening in Switzerland is that they probably going to have a deal to reduce the tariffs from close to 40%, 39% down to 15%. And the news headline just while we started the show was that the deal could be signed um, as early as on Friday. Okay, that's what I was talking about. The euro yen. I'm still long in there. I actually added again yesterday. I think we are on our way to retest the 178.80, and then above here, if you see the channel, it's been building. The top end comes in at around 179.75, and if you go onto the real long term, it is one that is coming back from right at the start where the euro was created over the high in 2008 before we had the GFC, and we are nearly back there, and that is also coming in at around, that's 179.75, 180 give and take, algo pips. Okay, so it does look like we may be on our way to go and test that big level that we have been building over the past nearly 30 years. Okay. Um, and really, for now, that's about it. Ryan, do you want to look at something else, maybe?
Yeah, I was going to have maybe a quick look at. Oh, we've even taken it. I was going to have a quick look at just 10-year yields because this is something we probably should keep an eye on with this shutdown business going on. Because when we're talking about the fundamentals, politics, whatever, we're going to trade in phases. So we've probably pretty much traded out the end of the shutdown. The market's going to jump very quickly to give us the data, give us the data, give us the data. So we're going to swing into that. So the first bit of data we're going to get, whatever it is, it's going to be important. And I think we need to go back to watching yields. We're back in the middle pretty much for this 4%, 390s, 420s range. I think this is going to define what the dollar does, depending on what that data does. So after Wednesday, it's going to be all eyes on when we get the next set of data. And I think yields are going to be a very important watch once again. But aside from that, I think we'll call a nice early one today. Have a great day, everybody. Thanks for coming to the Flow Show as always. Thanks, Kay, for all your analysis and updates. Take care, and we'll see you all tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.